Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings guys and girls, let's take a look again on the gold market. So here's we need to return back to the discussion of the pattern that stands on the daily chart, because currently in the gold market is a very tricky situation. We talked a lot about this. So from the one point of view, technically gold shows the background for possible scalp or short-term bearish trading, while the overall risks and political risks in particular and recent results could support the prices of the gold. That's why we have some doubts on necessity to go short in the gold market currently. Although, of course, it's not forbidden, and indeed the market could show some deeper retracement by far. So what we have by this moment, as you know, the colleagues in the United States have taken the vote, and the results obviously supports the previous information that Joe Biden is becoming the president of the United States. As you know, this result of the colleague voting has to be signed and stated by Congress on the 6th of January. So Donald Trump has less and less time to do something, and it means that as all legal and smooth methods and steps that he could take, he already has taken. It's appealing in the court, taking some legal claims from the states, from the advocates of Donald Trump. So all this stuff haven't led to any success. And it means that within the 2-3 weeks, actually, he has only extreme options in his sleeve. This is emergency regime, something of that sort, by the law of the 2018 and by the Constitution of the United States. And we think that these risks are still stands on the table, because overall Donald Trump activity doesn't look like the occasional emotional journey. This is mostly seems like some well-prepared plan for activity, and that's why hardly we could treat it as occasionally appearing contesting activity from Donald Trump. So we will see. Meantime, as by the common sense and by the public opinion, Joe Biden now with 99% have become the president. It seems that now we could speak on the possible stimulus is coming, and that could become the reason why the gold market today is turning up again. As you can see that gold is rising, and it's anticipation of the Fed statement, and since officially Joe Biden is becoming the president, investor starts to probably involve in the pricing, and it's making the pricing in some anticipation of the more supportive pack from the government for the United States economy. That's my suggestion, because no other drivers we have currently on the gold. What I do not like from the technical point of view concerning the bearish context is take a look, the market doesn't want to go lower, because all preparation for that, for a second leg down already is done. So take a look what we have for our time frame chart. On the 4 time frame chart, as the engulfing pattern has been formed on the daily, retracing back in the body already has happened. Now here, market has to continue the direction, but we do not see it. Market has tested the neckline first, pullback, second pullback right now. So this is bullish sign. This is not bearish normal price action. It doesn't correspond to the way of how market has to move with the bearish pattern. This pullback is a bit irrational price action in relation to the pattern that we have, which means that this pattern could fail. So if you have the position with this pattern, protect your profit, protect your entry point with a break-even stop, and see what will happen. Because this price action looks a bit irrational, and I would suggest that, well, chances that that pattern could fail, the hand shoulders could fail, now is increasing gradually. On the hourly chart, you could see what is going on. Here's market actually takes the shape of the flag. That's now starting for a breakout, and we have the bullish divergence forming on the hourly chart. Suggest the taking out of the stops, and here's the crucial level will be 1853. So until this level, it's in general we could accept the flirting and fluctuations of the gold market around it, because it stands below the major 618 resistance. The breakout of this level, it will be more probability that we'll taken out of the stop, pattern will fail, and we should be prepared to the challenge of the 1888 resistance. So that will be next step if we are correct on the failure of this pattern. So keep an eye on what will happen, be careful within your short positions, as I said, and keep watching on your position if you have the bearish position on the market currently. So control this area. So first is breakout of this selected upside, and then 1853, it could be important level. So if market will be able to stay below and drop back in this consolidation, that tells you that overall bearish context still has chance to succeed and continue downward action. But if this level will be broken, as I said, this will be actually decisive moment probably for a short-term context. And in this case, be prepared to return back to the 1875 and challenging of the 19 even area. So that's what we have from the gold. And let's see for the progress of the price action.